Guys, glad to have you on board again today with Thursday. So we'll take care of intermediate level. Just the usual quick reminder, if you're a beginner in there, then just make sure that if you do listen to those podcasts, it's normal that you feel a little bit overwhelmed. I don't go down the easy roads in here. I assume that those who are watching already know about most of those stuff. And secondly, if you do follow any of the scenarios we're talking about right now, then be aware that you don't master any of those conditions and those contexts. So please, if you ever go down those roads, make sure you always limit the risk on your end by dividing the position sizing at least by 2. And obviously for experienced traders in there who are having a look at the intermediate level, you know most of the shit in here, but it's still great to have a little bit of a revision a little once in a while. So those intermediate podcasts are the one that most people will have a look at, simply because yes, many profiles can do. Just make sure you don't look at extreme profiles you don't nearly give a shit. Like experienced traders shouldn't nearly have a look at the beginner's level, just like beginners should nearly have a look at tomorrow's podcast for experienced only. Anyway, so let's do it. So I'm eventually going to give you guys an option. I just tried to make this intermediate podcast live with the French users earlier today, but you know the French community is much bigger than the international one for many reasons. Maybe I should be advertising more to get some people elsewhere than in France, but I mean that's how it is, so I'm not forcing things. Eventually someday you'll be equally balanced in the community, but I mean for now you're less users, that's how it is. So I do spend more time with the French guys. I think that it's normal some way. But anyway, so I've done it, just did it live for them. But I don't know if there is room to do it for the English guys. So if you think that you want to make it, and eventually giving me like a time scale in which most of you guys can be available, because the point of doing things live is that I can ask questions and you guys can answer, so we can somehow build a little bit of interaction. So making it live without interaction, I think it's pointless. So when I do generally those Wednesday educational shows that we do live most of the time, you're like 25 or something like that. So they are very rare interactions. So either we define a time scale in which most people can be available, because the problem with the international community is that some people are in Russia, some people are in Japan, some people are in the United States, so it's freaking complicated to have you guys locked in at the same time all together. So I'm working on it, I'm thinking about it. I'll eventually put out a vote into Discord to just highlight which time zone could be the most interesting to highlight for potential live sessions on those Thursdays as well. Anyway, that being said, let's go straight to the point. So today we're going to cover two things: Bitcoins and cryptocurrencies in general, which could be the current, which one could be the current context. Option number 2, we're going to talk about the SPX and general asset classes moves on equities that have been moving significantly yesterday. So what are the implications? How far can we go? What could be the most probable context? So intermediate level, though I'm not going down the easy road, so the easy stuff is not going to be explained. So if you don't understand it, then either don't worry, that's normal, you get it through time, but I just can't lose myself and lose some time into endless explanations for easy stuff. All right, that's the reason why we've been scaling up the levels. All right, I'm not making things easy today, otherwise too much time wasted. So let's get Bitcoin first. So what could be this kind of thing? So let's zoom out as usual. You need to get up to the context, which is no context. All right, so all right, context alert, which means you need to zoom out to get to have a broader picture. So oh damn it, what do you see with those markets in here? So I'm just gonna, all right, we filled the gap, so that's over, no longer the gap in here. I told you we'll probably fill this gap, so that's done. We had another one still pendingly being opened below our feet. Let's have a look at this one. All right, so this one's done. We dealt with it. We still have partial gap in here at 7.4 down to 7.2. All right, so still a little bit of gap being open below our feet. Are we going to go down there? I fairly well think we do. But anyway, so let's make our analysis. All right, if you have problems and if you can't stand watching at the fucking prices, then just make sure you delete them, and you'll have a much clearer sight of what the hell is going on. So here we've got something to deal with. I should be deleting that as well. I don't know what I'm using it. So what happened recently? We can we can see some interesting areas. All right, we've been in here significantly dropping prices, fucking crosses, fucking breakout targets. All right, so in here we fucked up the support context as well. So trend channel accelerating sharply, context being broken down, targets being overwhelmed, range being bearishly tainted. All right, the mature range in here being broken down, so it feels like a trending market more than anything else. So let's validate this argument by going into the lower time frame. All right, so going into this lower time frame, though the risk is that we could be in a 4-hour trend. All right, that will be the case. So 4-hour trend takes a long time to figure out. All right, but in the meantime, what we have in here also confirms what we were previously highlighting. All right, we were definitely in a range. All right, top and bottom boundary. We fuck up the bottom boundary. Breakout targets being overwhelmed. Market accelerating. Fucking both contexts. So we definitely got a 1-hour breakout trend breakout that could also lead us to a 4-hour trend. All right, so that's the conclusion. We eventually will have a 4-hour trend, but at least for now, we're definitely sure that we have a 1-hour one. The market pushes down in here, probably made its divergence in this area. All right, and in here, we're making the pullback, pure and simply. All right, so we could be in a pullback context. We can see that we have two potential timings in here. So just having a look at what we can deal with in here. So I would say probably this one is a taking profit. All right, this one. Anyway, we're trading 23% Fibonacci as well. That's all the informations we have in here. So I would say we've got a cluster. We've got taking profit structure, building a little bit of a divergence afterwards. So we've got a little divergence in here and a taking profit structure is there. Now let's have a look at the prices. All right, yeah, that's it. All right, I would say, you know that anyway. What are the rules? All right, take your usual piece of paper. I'm not go down the easy path. So you know that the rules to get a pullback trade is minimum 23% retracement. So can you take the taking profit structure? No, you can't. Can you take the little divergent one in here? No, you can't, because there is no divergence. Remember that divergence means going higher, all right? So we needed a higher high in here to validate this divergence. So in here, we've got no risk management. All right, we just got a price reaction out of 23% Fibonacci. So in here, right now, we can't hardly trade this area. So though it's very interesting anyway, because we're trading on top of the resistant context out of a 23% Fib. We've got a price reaction, but I would say in terms of risk management, that's not enough. That's a little bit too much risk taking to get into this thing. So what is the next area? It's 23% Fibonacci. So the next area could be trading approximately 9K and trying to find a better risk limitation in this area. All right, or waiting for another breakdown or whatever, but in here you've got not enough information to deal with this 23% Fib. All right, that's the conclusion. So you want to trade with cryptocurrencies, either you wait for prices to accumulate in here and break out, and we'll stick to the 23, but anticipating the reversal in here is way too risky. I would suggest waiting for this area right now. Yeah, that's pretty much it. I would wait for possibly a bullish breakup attempt, like the market building across, and I think if it tries to break up, we'll get a cross somewhere nearby in here. Probably much better risk limiting signals, like it's hard to say, but I'd like to have red signals. That would be great. Like having a bearish momentum would be nice. All right, so if we can have that, that would be the perfect case scenario to make a new low. All right, With the French guys, I just had a look at the order books. All right, so the order books have a sweet demand on 7.5K. There's also 7.2 and 7.1K. All right, so two demand areas in here. So these are the areas we can target. All right, so the 23% fib, yeah, it's fine, but anyway, there is not enough risk limitation to get to sell this one just right now. It still remains interesting because we're trading the resistance context, so for a pullback, it's very interesting anyway. Though, if you want to take it, I suggest very tiny position sizing because pretty much some chances that we try getting closer to the 38% fib. Remember that the pullbacks, you always trace close to Fibonacci's, either the 23 or the 38. We rarely go to retrace up to 50%. So the favorable twos are this one. The first one has been tested, very low risk limitation. Still, you could have been taking that trade, but simply with a tiny position sizing. The next tradable area, like I said, is closer to the 38%, which seems a lot more reliable to me if we ever get there. For now, we're still hesitating in between, so ranging, flat hesitation. Wait, either the market tries to accelerate there, and interesting selling entries if we've got the risk limitation. Second option, all right, this is too late. We already been overbought in here. The market just digested and went up to 23, and we're never going to go higher. That's also an option, all right? I would say anyway, right here, right now, I see nothing to do, but just waiting for further and better risk limitation. Regarding stock market, yesterday has been a hell of a ride, obviously. Alright, the bulls are taking a hard hit, but we're in ranges, so remember that either the bulls take some hard hits, the bears do as well, so we're both ended up fucked up if we take too much risk. So it's all about risk limitation. Alright, we've got daily context and alert, so we need to go weekly to figure out what the hell's going on. Damn it, weekly as well, monthly fucking charts. So here's what has been going on. We're breaking down the monthly fucking lows. And people just act like it's nothing. I can't believe it. That's just astonishing to see how crazy stupid the people can be right now. Both the bulls and the bears, all right? But the signals are clear. Breaking down monthly lows is definitely not a fucking good sign. I mean, we're just the 2nd of October, and we've already been breaking down the previous month's lows. So it's 3 months in a row with upper shadow candles, all right? And we're already breaking down the previous month's low. So either this is a bear trap, the tiny bear trap, and we're making the lows just right now, and the market will reverse and take the bears in a wrong footing structure. That's possible. Option number 2, the bears have won. And no matter how hard we try, we'll never break the previous month's highs, which means we can put a safe stop loss some way at 29.93 and just ride this thing. The momentums are bearish, so if we go bearish in here, we terminated a bullish oscillation in the fucking monthly chart, which means we could be bearish monthly, and monthly bearish structure is exactly what I'm looking forward for almost 2 years. All right, so having this, I've been waiting for 2 years. If it shows up, that doesn't even surprise me. We've got monthly fucking signals. Remember that this is a monthly valid tradable reversal signal. We're overbought with a divergence out of a mature move in here. All right, so yeah, I'm sorry to say that, but to me personally, I think we could have something in here. So it needs to be confirmed with just the 2nd of October, pretty far from the monthly close. But in a monthly fucking basis, what we have in here is not pretty. And I see bulls totally ignoring the risk. Like, anyway, it can happen, it can't happen, it can only be bullish. All right, from what I can see, it can very well be bearish. So you need to pick a side. Like I said, there are bulls timing, bears timing. It's not bulls timing right now, it's bears timing, and we're trying to figure out if the bears are strong enough to hold the area. If they do, then we'll go lower. It's simple as that. So anyway, in a shorter term perspective, yesterday, like I said, hell of a ride. We've been reacting into monthly signals, so it's not nothing either. The thing is that what we have in here is a daily bearish momentum. All right, we've been making new lows with the momentum. Remember that when you study the momentum, you always have a look at the 4 previous swings. We're going down, though we validated the market top right now. It was still speculative at that point. Now we clearly close into the negative territory, right? So this swing is now validated. The 4 previous swing, 1, 2, 3, 4. So how is the momentum? Making new lows, holding in the highs and lower highs. How's the price? High low, lower high. So what we have right now is hesitation, all right? So hesitation still leads us to at least test normally this trend line and hold in this one as well. So what is the next thing we're very likely going to be doing? Testing this trend line on momentum and probably testing this one as well. So a lot of people are building this trend line. It doesn't make any sense to me. Absolutely not. I think the area we're going to have to test is this. It's all the moving averages that we've been holding all along. This is the average prices they did, okay? The moving average prices in here. I think we're going to test these prices again in the next following days. Problem is we've got catalysts, we've got the NFP, so NFP can impact prices. I don't think it can change anything from this. So I still tend to believe that we're going to go lower with Wall Street, a little bit lower. And that's what we're going to try to explain into lower time frames, or to confirm with lower time frames, all right? Because we got not enough information in here to highlight this. We just see high probability that the momentum goes lower in the daily chart. The problem is, as we do have lower low and lower highs, we've got high amount of pressure out of this trend line, because as the previous time we were heading toward this trend line by making new highs, now we do have a lower high, so a lot of pressure on this supportive area. That doesn't mean it's gonna fail and break down. All it says is that the odds for breaking it down are now significantly rising, all right? But you really need to build that trend line on your chart. It's absolutely necessary that you have it, because that's the daily momentum structure that is at risk in here. All right, so don't forget that. It's really important that you have this one on your charts. All right, anyway, let's go lower time frames and try to find a suitable context. Remember that you always need, if you want to understand the market, have a look at the broader, at a broad context, and try to find a market in which we are trading in the context. So we're saying that we're trading in the monthly resistant context with monthly overbought cluster signals. Right, so monthly overbought with a mature trend generally means end of economic cycle, possible reversal, you know the drill. All right, though in here we're also trading the 4-hour support context, which means you don't sell on support context. So if you want to sell, I'm sorry, but that's too late. So we need to contextualize this market. All right, monthly could be potentially bearish, but it's a little bit too early to figure this one out. Though 4-hour is the range, is the structure we need to highlight. It's the context we need to figure out to understand what the hell is going on in here. So let's do the same old shit. Let's remove prices and figure out what the hell we are dealing with. So what do we have as informations available here? Recently, we've been accelerating the trend channel. We're now dealing below support context. We can see that there was a breakout target setting in here. We've crossed below moving averages. That could be something of importance. So we're trying to figure out if we're dealing with interesting price area. Remember that most of you guys, what the first things you do when you're beginning with the strategy, you're having a look at this first. You say, all right, there's no signals. Yeah, there might be no signals, but still, first of all, deal with the prices. Put a context to the market, answer the context, all right, by figuring out the technical information you've got available, and then you'll eventually figure out what the hell goes on. Though I myself just did a big mistake, because I just did it for the French guys, so sorry. Remember that question number one is fucking context, all right? So what is this kind of context? Is this a trend or is this a range? That's what you need to answer first of all right? Though in here it's simple, we go from context to context, so this is a range, all right? You need to answer the second immediate question, how mature is that range and what is its structure? So we move out from a bullish movement, all right, the 1 2 3 4 5 contact, 1 2 3 4 5, and we're making the 6th one. Problem is we've made higher high in here. So moving from a bullish movement, if you make new highs, then you restart the count. That's something you really need to figure out. It's not written on the PDF. I should be doing this because it's important, even for beginners. So the thing is, all right, we're swinging between contexts, so this is definitely a range, but the problem is, as we've made new highs, you restart the count, all right? So in here would have been first contact, second boundary, And then in here, instead of being 3, that's 1 again. All right? We're restarting the wave count to 1 because we've made new highs. Coming out of a previous low points, all right? So we're starting this range out of lower valuations, which is important, all right? If we do the opposite, all right, like if we do something like that, all right, like consider this market making an opposite thing, all right? You would say first count, second count, first count again, second count, third range boundary in here. Remember that the beginners look at the third range boundary every time. So what did we have? Third range boundary in here, great, all right? You couldn't take this one as it was not above context. It has been right into context in here, so this is a bearish range context, right? So we had a bearish range trade in here. It's not the most convenient one to take, but still it's one. Sorry, that's not what I wanted. All right. Though we have a range context, possibly a bearish range context. So bearish range context, remember what you do. You deal with those contexts when the prices are below the support context. So in here, we are into an interesting area. Problem, in bearish ranges, you generally break the previous lows. All right, you need to maintain the previous tops and you need to break below the previous lows. Problem is in here we probably much have a double top structure, so an equal top, which means we look out for our supportive area where the prices have been supporting in here. So I would say our supportive area still remains in there. All right, let's say in here is where the bottom of this range, the support area of this range will be. All right. So starting where we've made all those shadows and stuff like that is where I think the support will be. So it just confirmed what we figured out earlier, don't you think? It still fits the plan, all right? What do we find in here? The good damn supportive area with the trend line. So a lot of people right now are drawing this stupid trend line that to me, technically speaking, doesn't make any sense. But we have technical information, all right? We do have a target in here, and this target has been misplaced. As you can see, the breakout level significant, where we accelerated should have been in here. So the breakout has been a little bit too early anticipative. Reason why it's been locking out this support area instead of this one. So this is where we accelerated. This was the previous top, so the target was definitely in here to be set appropriately. So we're dealing with a target area. Though in here we can start reading the fucking momentum. We're in an area of interest, so we need to know what the market does in here. What is the momentum risk limitation we could have in here? As we can see, we're dealing with a bearish oscillation termination, right? We're in a potential bullish reversal area in terms of cycle, but momentum just gives you absolutely no information, absolutely nothing to deal with, at least not yet. Eventually a pattern could show up later, but so far we've got nothing. All right, so we've got price reaction on a Fibonacci with a target. All right, so that's all we've got. That's a significant cluster of information. All right, that's not nothing. So something can be done in here. It depends on how much risk you want to take, how aggressive you are with that scenario. I personally just done one thing, lowering the stop losses, no profit taking, whatever. I could be doing some partial profit taking. I just chosen not to. I'm risk taking. You know, I'm a high risk trader, though I see the risk. There is a tiny bullish risk in here. It's not negligible, but I think I don't need to act right now. I'd rather like to act on this trend line. So anyway, there is, for me, mandatory risk limitation in these areas. Right? We get there, you need to risk limit. That doesn't mean you need to take 50% off the table. Just either lower the stop losses or eventually take a little bit more profits, like a 10 to 15% profit taking is probably what I'm going to be doing. No more, no less. If I do partial profit taking, here will be for just one reason, to sell accumulation. Because to me, remember that wave 1, 2, 3 means wave 4 is probably down the corner, means the range is mature, means I'm looking for accumulation in those areas. So I'm probably going to partial profit take to sell harder in here and pay for my reinforcements. Now I have a scenario. That doesn't mean that this is what's going to happen. It just means I know what I'm ready to do if it happens. All right? I have a plan. That's important. So now what I'm looking forward for is an accumulation. Either there, but it's very less likely going to happen, but still not impossible. We do have a target, and remember that breakout targets generally slows down price, or at least blocks price going further for approximately 30 to 40 bars. So we could have a 30 to 40 bars accumulation in here before going in there, and in that perspective, that could be also a possible scenario, accumulating and fucking up the trend line without even testing it. Or, like I say, option number 2, we go down the path in here, we oscillate, we accumulate in there, and then we break down. All right? There's also a possibility for this area to be just a trap, and in that perspective, we'll go historical highs, I'll be stopped out without losses. Like I said, nothing is ever granted. Many people right now think that the crash is inevitable. I've seen so many bearish videos recently, like people forecasting the crash for just a couple weeks or whatever. Don't listen to those guys. First of all, they might be true, all right? We don't nearly give a shit about true or false. Most of what they say is true. What we care is how you apply information into trading. That's a strong difference. Those guys are dealing with information. They tell you, all right, the repo market is under high pressure. Yeah, that's true. The market is overpriced. Yeah, that's true. They are a bubble. Yes, that's true. Some bubbles, but we can still create other bubbles, all right? And you make the immediate conclusion that if you sum up those informations, you have to sell right now because the crash is inevitable and it's going to show up rather sooner than later. So you need to act fast and you need to act solid. What the hell are you doing? Since when do we deal with informations to trade? That's not what you do. Information is what you process to build yourself a fucking conviction. So if you think those things are great, are true, and that you believe these informations, then you're going to have a bearish bias. All right? You mean you're going to try selling the market rather than buying it. That's great. Now you know which side you're going to be trading, but that's just one of the 4 informations before you actually fucking press a button. So, second information, context. That's exactly what we're doing right now. What we've just contextualized is that the market is under bearish risk, but we're still ranging at the moment, so we're still way too early to consider a bearish trend validated. It might be showing along the way, and if it does, we might want to look for an accumulation first. The market can break without accumulation. It happens a little once in a while, but statistically speaking, we've got more odds to have this accumulation. So until we get it, wait for it. As simple as that, all right? This is really way too short for a 4-hour accumulation. So yeah, probably a 4-hour accumulation is down the road, all right? And I very well think that it can be built either in the nearby area, and we could stay there for quite some days, probably terminate the week in here, and very likely I'm going to have next week dealing with this area as well. Option number 2, we keep on falling because of a bad NFP or whatever, and we're going to range down the bottom area. All right? So anyway, I think what we might very well expect in the following day is digestion to eventually create congestion and distribution afterwards. Accumulation, not distribution. All right? So look forward for this accumulation. Now that you know which box of the strategy you're going to be using, then you finally got to answer the third question. All right? So you know what you wanted to do. In my personal case, selling. If you want to buy, I can understand that, all right? But you can hardly buy in here because, yes, you've got a price cluster, but you've got very, very tiny level of information in here. So if you want to buy in here, yes, you can. There's something you can deal with. You still get a target. You still get a buying signal. It's still not yet confirmed. It would eventually be in 2 minutes. We're dealing out of a Fibonacci cluster, and we're below support context. So you want to buy, that's possible. But the risk limitation you've got in here is pretty narrow, pretty low. So if you want to buy, I'm okay. But you suddenly know that you want to buy cheap. You want to buy tiny position sizing. That's all you want to do, all right? So we're not talking about the bulls in here. I'm talking to you about my scenario. But like I said, if you have a bullish bias, then there's something you can deal with in the area, in this area. For bears, all right, like I said, our goal in here is to assess the bullish risk. The bullish risk seems limited, but still it's existing. So you can't do nothing in here. You have to do something. Lowering the stop losses, partial profit taking, whatever you decide. It's your own choices. I think this risk is pretty low. I would be more concerned if I started to have some bullish signals in here, which I don't. So I mean, bearish momentum is very likely going to just oscillate for a bit before starting again. So I don't see a reversal risk. All I see is a ranging risk on the lower time frame. Though, that's what we figured out. accumulation out of this mature range means that I don't see any reasons to get out. All I see right now is reasons to go 1 hour time frame to exploit this potential accumulation, because I've got my bias, I've got my price area, I've got my context. I've got my context. I'm just waiting for the price area that matters to have my risk limitation. All right. So I'm certainly not going to take any trade right now as a bear. Just know that I'm going to have to wait, and I'm going to have to look for additional informations. Though in here, what we have is very, very interesting, because remember we were hesitating about if they'll go in lower or not. What we have in here is a market fucking up breakout signals. That's weird because these are range breakouts. So we generally rarely break this one, but here is where I think the core information were. We had two opposite square signal. Remember that this means you can highlight a range. The range was definitely this, right? This was our range. We broke it clearly to the downside. So I don't know, but this is probably an indicator problem in here. It shouldn't nearly have been doing this. But in here, we're clearly getting the fuck out and breaking down a range. So there is a breakout context in here. And I very well think that we're not going to stop there. Though I think we've got a trend to deal with in here. All right. So when I told you, I think we're going to go lower. That's what the lower time frames still tend to suggest at that point. I think there are more bearishness coming along the corner. All right. Problem is in here, as you can see, the structure, the wave structures tend to be wave 1, 2, 3 with same size, 1 to 4 overlap, all right, and it seems to be a wave 5 extended. So this is the wave that generally gets to break the supports. Where is the next support? In here. So I think this is where we're going. I think we're going down this price to terminate this 5-wave extended structure, and then we're going to build our supposedly range and accumulation. So in terms of early expectations, all right, this is highly speculative, so I've got not enough information to make sure that's what's going to come. But if I have to make a choice, I would say we'll have more odds to create our accumulation in here, because I still see a little bit more bearishness down the corner. We're wave 5 extending in here, so in here we're not even divergent yet. So I think there is a trend going on in here. So I think we're in a 15-minute trend currently. 15-minute trend going on right now. We're going to confirm that right now, but I can be pretty sure that this is what we have. All right, when you see breakout target being overwhelmed, breaking support context, pushing, still no divergence. So I very well think that divergence is down the corner today. All right, and then we're going to have probably a pullback and a final excess. So that's what I think is down the corner. Problem is the NFP can very well change that. 15-minute time frame is under impact for NFP. So NFP is the only thing that can fuck up this current scenario, because personally I think right now all we have is that we're dealing with a short-term pullback in here, probably pushing toward the divergence. So I don't expect much deeper price drop today or tomorrow. I expect just a little drop, just to go lower, but not necessarily accelerating. I think we're going to slow down the pace, all right, like this. We're creating divergent structures in here, all right? So we're exhausting this first move, but this first move will create its own pullback, and we'll have to deal with its own final trend. So I still see more bearishness. I think for the bulls, patience is required. If you want to buy, then make it very low risk, and I don't think that's a wise choice, all right? You can still hope that the U.S. administration will come save your assets. You can still hope that the NFP will come save your assets. That is hope. Remember that if you trade out of hope, you better be lucky. If you base your trading income out of luck and bad luck, no way. We're not playing casino in here. That's not how you do, all right? Your risk limits. Even if you need to assess that NFP is down the corner, it can be a game changer. Powell's also talking tomorrow evening. So yes, there are some informations that can fuck up these technical structures and contexts, but can you just trade because of hopes that this will go along your way? That's not how you do. So either you don't trade and you say, all right, too much catalyst, too much pressure to handle, although I'm not trading. I can understand that. I told you the market is not easy right now. It's probably the hardest market I ever had to deal with over the years. So yes, the market is complicated right now because of unexpected catalysts, a lot of hesitation surrounding the context into geopolitical things. Even the macroeconomic is mess to figure out. So yeah, it's complicated, all right? So it's not about time to be betting on your future, like putting all your savings into either buying or selling the market. It's more about learn safely, all right? Trade safe. Think about safety first, all right? More than anything else. But is there more bearishness to come in Wall Street? I definitely think there is. Where's the next area for me? Quite close to 2820. 2840. In this area where the trend line is, I think this is where the stuff will matter. That's pretty much it. So you've got context to exploit, you've got trade to take, all right? And remember that we're not forecasting the future, we're just using boxes in which those boxes provide positive returns over time, which means the box right now, even if you use it, doesn't mean this one will be profitable. It means that if you respect this box's rules and you play it over time, if you play it like 50 times, you'll obviously get money in return. All right, it means those things provide more gain than the losses they could provide when they fail. All right, they will fail at some point, so don't go over emotional with a single use of that box. If you do this, then that's simply not trading. So you might be overexcited right now because people think about the crash, you think it's about time to make money, whatever. No, it's just about time to use your boxes, just like you always use them. The core element for trading is to repeat the same old shit all over again. If you alter that shit, then you're simply not profiting from those positive rewards. It's just, all right, trade it differently and you'll do it, and you'll not do it well. All right? Trade it just the same old way. It's how you should be doing this thing. All right? Consistency really is the key in trading. Yesterday evening I've been making a podcast especially for the French. Eventually I'll do it as well for the English because I think it was valuable, talking about the bearish biases into trading and the problems they can cause, as most of you guys are suffering those bearish biases. Like along my community, 80% of people have a bearish bias, and I tend to believe this is a general stuff anyway, that there are more bearish biases than bullish biases in the market. For, I don't know, there is probably a psychological reason behind it. But anyway, problem with bearish biases is, all right, I'm going to do it right here, right now anyway. So I'm going to make a quick version of yesterday's French Guys podcast. So we were talking about the bearish biases that are pretty much exacerbated right now because of all those end of the world crashes coming emergently in an emergency kind of videos that are popping off YouTube recently over the course of the latest 48 hours. Obviously the market is going down, so people are panicking and getting emotional with it. So the problem is, I assume most of you guys have been looking at those videos. So there is a problem. If you have a bearish bias and having a look at those guys, it would just create one thing: feed your bearish bias. And that's very dangerous because you're going to have to be rational with those things more than anything else, and right now more than any other time as we previously dealt with. Because remember that biases will force you, not even being conscious of what's going to happen, it's subconscious, but it's going to force you to alter your rules. And the problem is both biases are dangerous. There are bulls biases and bears biases, all right? So they basically tend to work the same. I can't tell for sure because I haven't been bullish biased, but only, you got just one of those two, all right? You can't be the two. There are some rare psychological profiles that can be somehow two, the both of them. They're really dangerous. This is what we call contrarian trading. Basically the guys who generally just do the opposite of what the market does. When the markets are bullish, the guys are irrationally bearish. When the markets are bearish, the guys are irrationally bullish. So this is the most dangerous thing, but we're not going to talk about that. So bullish biases and bearish biases. Just reverse what I'm going to be saying from the other, right? So the bearish bias is when the market moves up, you find this to be irrational, though you're going to fight. The problem is biases tend with two faces of the coin. The first face is that you're going to fight against the opposite bias, all right? So it's by opposition. If you have a bearish bias, you're going to oppose and fight against bullish movements by an irrational manner, which means what you're going to be doing is that you're going to let go with your losses. You're going to say, all right, I'm obviously taking a loss, but I'm going to fight against that loss, because that's the bias who's leading you toward this, all right? You think it's irrational, whatever, many reasons. I would personally bearish biased for some different reasons. Each person has its own psychology, but I personally was heavily tilted because of my sense for justice. I've got a huge problem with injustice, and the problem is I thought it was absolutely not fair for the Fed to inject crazy amounts of money back in the... I had those biases when I was learning intraday trading, so it was 2011, 2012, approximately. I can't remind precisely. I think it was something pretty much closer to 2012. And so back in those days, full QE, it was all about injecting money, saving the market from the previous crashing and stuff like that. So I thought that was absolutely irrational. Like I was saying, no way, we have to deal with the problem instead of just giving money and money for crazy amounts. So and back in those days, there were still the same old perma-bearish guys making videos on YouTube and stuff like that. I was looking at those videos, and all they did is basically convincing me that the market was irrationally bullish, though I had to fight against the bullish movements, and that was absolutely fucking stupid. I figured it out afterwards, and I hope you're gonna figure it out as well sooner or later. All right? So you're fighting against irrational bullish movement because you think they're irrational. They might not be, all right? They might just be technically viable, and you should just follow fucking them, right? That's the difference. You don't trade what you think, you trade what you see if it goes along what you think. The problem is with a bearish bias, you're going to have to somehow tend to trade what you think instead of what you see. You'll see for clear reasons that the market is bullish, but you're going to fight against it. That's stupid, that's irrational, that's subconscious, though you need to fight those biases. Now the second face of the coin is that the bearish bias is not just impacting when the market goes up, it's also impacting when the market goes down. Because with a bearish bias, you're going to fight against bullish movements, but you're going to amplify emotional behaviors into the bearish movements as well. Because it will happen sooner or later. Some people tend to say the crash will never come. Believe me, the crash will come. It's just you don't know when. And the problem is if it comes along the way, like let's say the guys are right, all right, within the next couple of months, we're going to have a crash. Yes, let's assume it happens. What's the problem if you have a bearish bias? You're going to still lose money in this crash. And do you know why? Because you're going to bullshit trade. What you're going to be doing is that you were looking at this thing for long, all right? You were hoping the market will go down because that's rational, that's what needs to happen. We've went too far high, so we need to go really far low. That's a big problem, because in here you're already altering the rules. You should be just selling a bearish trend after buying a bullish trend, all right? You should be not biased, or at least limit those biases' impact. And instead of doing this, you're just going to let yourself go. You're going to say, oh man, the market is going down, I'm going to make shit ton of money, and I'm going to be rich. No fucking way. That's not how it goes. What's the point? You want to be rich? You want to be crazy rich? Remember about all those things. Just put these things into words. Does that seem like what you need to do? No fucking way. We're not here to be gorgeously rich. We're just here to take tiny bits of money recurrently in the market. That's what we do. All right. So anytime you think about that, you're under biases. All right. Means you might have fought against the bullish market, and now you think you're going to make yourself rich with the bearish market. God damn it. You're just under heavy biases, which means you're going to do shit when it comes to risk management. You're going to take oversized bearish position, which means you're going to take too much risk, and you better hope the market doesn't pull back, because just a tiny pullback can just fuck up your entire risk management if you're too aggressive. So the problem, bearish bias, fight against bullish trends, stupid, obviously, you should just profit from them. And on bearish trends, when they ever show up, and they always will, it's just a matter of time, if you're not dead yet and you can actually profit from them, you're going to fuck them as well, simply because you're going to take too much risk, and a simple pullback can put you out the table. Second problem, you're going to be failing on your profit taking, which means instead of highlighting targets and profit taking on those targets, you're going to say, oh man, we're 7.2K, that's the profit taking area, but I feel like we're going to go 5% more, and I want to ride this fucking train until the bottom. And that's exactly what you shouldn't be doing. You're going to fail on your profit taking, which means sooner or later the market will also reverse, fuck you up instantly, and you most likely will end up with no gain, which means you suffered quite some significant stupid losses in the bullish market, and you're going to entirely fail your stupid bearish market reactions because you will just irrationally be greedy. All right? So understand that, and understand that those processes, if you ever fail just a bit of it, then just don't let them drive your decision making. So when you make a decision, always make sure that you respect the plan, all right? That you respect the strategy, and that you're not under those biases. You might be, and you probably won't figure it out. So make sure that even before pressing any button, ask yourself that question. Think about what Phil said. Do I actually fit a little bit of those things? Because you probably do. And just make sure that you don't make your decision because of it. That these things doesn't alter your decisions. They probably will, because I know most of you guys are bearishly tainted, and some of you guys are really, really, really dangerously tainted. So just make sure you don't overposition size, and that you don't miss your targets just because you think it's going to go lower. That's exactly the kind of stupid thing that the bulls biased guys do. They just do the opposite thing. All right? In bullish trends, they forget about profit taking. What do I say to every fucking bull guy for 2 years? Do you see the risk rising? So why the fuck don't you take the money off the table? You think it's going to keep on going forever, and what if it doesn't? What if actually the market reverse? That's exactly what I tell the bull guys, because there are some bullish biased guy as well, all right? And they think it's going to keep on going forever, and even if the risk is rising, and if we have significant amount of gains in the pocket already, it should be time to lock on those gains, but those guys don't nearly give a shit. They think it's going to go up forever. And when it goes down, what are they going to be doing? They're going to fight against that. They're going to say, we're going too bearish for stupid reasons. We shouldn't be going down. The economy is doing well. They can justify the shit however they want. All right? That's exactly what they do right now. The market starts to give some very dangerous bearish signals. What do they say? They just ignore it. The perma-bullish guys, do you know what they're saying right now? They're saying the consensus is irrationally bullish, though is irrationally bearish. People think about the market crash, so I'm buying the dip. That's exactly what they're doing right now. We have clear evidence that the shit might hit the fan. We've got clear evidence that the market is showing some signs of bearishness. And what do? They ignore it and they trade oppositely for some very stupid reasons. That's exactly what a bearish guy will do. Technically speaking, on a bullish trends, the technical elements are bullish, and people just focus on the bearish ones. And anytime there is a tiny bearish information, people overestimate its potential, though they're selling the market for stupid reasons. That's exactly what is going on right now. We've got potentially bearish signals showing along the way, and people ignoring it to oversize potential bullishness. They think the Fed is going to save us, or the White House, or whatever. They're buying the dip without a single fucking signal. Guess what's going to happen to them? That's simple as that. I personally think they're taking very bad decisions. I'm certainly not making the same one. I'm making the opposite calls right now. Yes, I think selling those guys is what needs to be done. But that doesn't mean I'll be right and they'll be wrong. All it says is I'm risk managing, they don't. So I very likely will take the money rather than them. It's simple as that. It's as simple as that. All right? It's no overconfidence. It's just I do my job and they don't. They alter their vision. I do have what is probably, I'm not perfect. You're never going to be perfectly balanced, but I'm far less biased than they do. So I think at some point they'll end up being proven wrong. When they will fight against that. They'll keep on holding the bullish position, eventually even reinforcing them, which is the worst case scenario. And in that perspective, they'll end up broken. That's simple as that. So some people have a bullish bias. Just make sure you don't. All right? Some people have too much bearish bias, so make sure that you don't. Because anyway, both are just far less profitable than they would be if they just destroy those biases. And be aware that you don't destroy those biases. You just dampen their influence into your trading. You're always going to be bearishly tainted. I will always think the market is irrationally bullish anyway, that we shouldn't buy all those stocks anyway, that it's not safe and sound for the world, that it creates so much inequality, whatever. Yes, I don't think that's fair. I don't think the market is fair. I'll never think it's fair. And you know what? I've been dealing with that for a long time. I don't nearly give a shit anymore. I still think about it. I still have my same old opinion with the market. I don't think that's what we're doing is fair. All I think in here is that anyway, that doesn't need to impact my trading decisions. I'm not here to change the market. I'm not here to make justice. I'm just here to pick up a little bit of money. And what matters is what I do with that money afterwards. It's all that simple to me. Right? If you can't figure this one out as well, if you have the same problems that I do, if you have a bearish bias for God knows what reasons, try to make it rational. Try to ask yourself your questions. What in your personal fucking life is impacting you with the way you look at the market? I personally think that's the most important thing that is impacting me. Justice. I have a strong sense for justice, and the problem is the market are not, it's definitely not fair. It's not going, and it's never going to be, all right? So I needed to deal with it. That problem shouldn't be leading my decisions. And it was back in those days. It certainly is not today. And like I said, I still think about it that way. It hasn't been changing what I think. It has been changing what I do. And you really need to do to make the difference between the two. It's really important that you put something in between. And I'm going to finish with this, all right? If you think that working on your biases is the thing that's going to make you a winner tomorrow, whatever, you just got it fucking all wrong. First of all, it works through time. It's something that you dampen, not something you switch on and off, all right? And moreover, these are psychological processes, so these are things you've been born with, or not born, but that you were taught to go down this road through time. So don't think that you're going to change yourself. Don't try to change yourself. Just change the way you decide out of your personal biases. And more than anything else, if you think that you need to work your psychological issues right here, right now to be profitable, then just make sure you already have learned a strategy and have dealt with fucking risk management first. Because these are really way more effective at reducing losses and eventually showing up gains. I mean, safe gains and recurring gains, meaning that you're learning the fucking job, all right? But remember that if you put things in a different order, it simply doesn't work. Working your psychological biases is what you do when you get to be at least intermediate to experienced on levels, all right? You start working on it at least intermediate. If you're a beginner right now, just don't go down this road. Just make sure you're not too much impacted, but don't put a lot of effort and energy into trying to work out those biases. You should really put that energy into learning a fucking strategy and trying to have a glimpse of what risk management is first of all. That's the first key element of moving forward into learning trading. If you don't start with this, you're simply wasting time. Start with that first. This is where your energy is going to be the most efficiently used. Then working your biases can be possible, but don't focus on just that. There's still a lot of things to learn, and they're definitely not the most important. They're important though, but risk managing is way more important than working your biases, right? Like I said, the biases will impact risk management, but if you don't even know what that is, then fucking figure it out first, and then you'll work out your biases, right? I hope you do understand that. So anyway, that being said, I think we're going to stop here for today. That's nearly a 1 hour long, so I think it's about time to stop. So I hope you like this one. Anyway, eventually, yeah, I'll put a poll into Discord to see what schedule we can set for eventually making these ones live. Anyway, see you guys later. Tomorrow is for experienced only, so once again, if you're a beginner, don't have a look at those shows. And yours is on Tuesdays, so anyway. So see you either tomorrow or next Monday. Bye, guys.